Oops, before I get the recording. Alright, good afternoon everyone. Today is Monday, May 14th, 2012. I'll go over the results and trades that we took in the live trading room this morning. If you have not taken a free trial with us, go to www.cfrn.net/apply and you will be able to sign up right there for the free trial. The free trial includes all the indicators you see in here and all the charts you see in here. Alright, all the data feeds, and then a whole bunch more as far as the data feeds go. So just go to www.cfrn.net/apply. Alright, now let's start out with the results. With the ES, I thought Dwayne had taken that last trade that he mentioned, but I guess he didn't. So we didn't get any results on the ES. On the gold, we ended up with -6 ticks. On the Russell, we were -12 ticks, and on the YM, we were +17 ticks this morning. Alright, that's what we ended up with. Let me go through the trades, and I'll go in more detail about everything that Dwayne just showed you too. Okay, a little closer detail. Alright, let's start out right here with the Russell. Okay, right here on the Russell, we had a short right here. You see we had bullish divergence. I'm sorry, we had a long right here. We had bullish divergence, and we had a test of the BBC. Now this is the setup right here, guys. This is the setup I'm going to go over again and again and again. It's the same thing across all these markets. All right. The MA1 crosses over the BBC. The MA1 is this blue and red line. The BBC is this green line. Price and the MA1 cross up above, and they pull back down to the BBC. When you have divergence, meaning the green line down here is moving away from the cycle, which is the red and blue line, you look to get long on an up close in this particular case. All right, we get long on an up close, and that's what I did in this case. It went a few ticks in favor, and then it stopped me out. So when it reversed, came down here. Now this is the ideal setup. If it were not right inside the weekly trading zone, that's why I got out of this one early, because it was right inside the zone. But when it reversed, this is ideal, where the green is going in the opposite direction of the cycle, which is the red and blue down here, okay? And price pulls up to the BBC, the green line. You get a down close in favor of the direction of the cycle. You're going in the same direction as the red line down here. Down close, and you short right there. That is the ideal setup right there. Okay, and you can see that worked out really well. I got out of it early because it was right inside a weekly trading zone. All right, the next one that I took, I shorted right over here. We had some divergence. This was not an optimal setup because the cycle was blue and headed up. All right, sometimes the cycle will be blue and stay flat, but this particular case it was blue and headed up. So as soon as price got to the MA1, I moved my stop to break even, and I got out of break even. All right, it reversed here, and this was one of those ideal setups that I had mentioned earlier. Again, it was right inside the weekly trading zone, so I didn't take it. But you can see right here we had the divergence between the blue line and the green line down here, and price came down, tested the BBC, the green line up here, and gave an up close. That was the spot to enter for the long trade. Now, right in here, I want to show you something down here on the bottom. When this green line turned into the brown right here, all right, we're coming off the BBC and everything else right here. We didn't really have divergence. We had a tiny bit, but not really anything noticeable to do the divergence trade. But when the green line moved in the same direction as the brown down here, you can just jump right into that trade for usually about 6 to 8 ticks. Okay, moving along. In here, we didn't take this trade because it pulled too far through the BBC. Okay, over here, this was another one where it pulled back and it went back down in the direction of the cycle. We missed this trade here. All right, the spot to short would have been right here. And we missed that one, and same thing in the opposite direction. We missed this one. We did take this one at the end of the day. We took this one for a break even, and that's been pretty much it. Okay, right in here there was one. This was during the break. There was one. It came back up, tested the BBC, gave a down close right here. The cycle turned blue. So when the cycle turns blue, there's a good chance that the MA1 is going to hold. So when price gets to the MA1, that's when you want to reduce your risk. Right, at least that's when I reduce my risk. So in this particular case, you would have been looking to short right there. Probably would have gotten a break even after it hit the MA1 and pulled back. It would have stopped you out right over there somewhere. All right, you see the bearish divergence is right down here, and the cycle turned blue on you right in there. All right, That was the Russell this morning. Now let's go over the ES in a little more detail. Okay. This morning there were a couple of trades this morning, but in the live trading room, the one that Dwayne just described was right here, where the BBC was green. We actually had bullish divergence supporting this. Price pulled back down to it, and Dwayne even mentioned this in the room. But the BBC was green, and price pulled back down to it, supporting it, and it moved up here. Now this is 2 points from entry to right up here, the peak of this bar right here. That's 2 points, and that's what you use on the ES is a 2-point bracket. All right, so it would have reached the profit target there. If you didn't get filled, you could have taken some profit, or move your stop to break even, or you could have left your stop alone, and you would have gotten filled over here. All right, that was in a little more detail. Let me blow it up for you so you can see it a little better. This was the setup right here. The original intent was to get long over here, but it didn't pull back far enough. It did pull back far enough over here. Okay, that was the setup this morning in the live trading room. Okay, that was on the ES. Now let's go over to the YM, and I'll show you what we did on the YM. We missed a bunch of things on the YM, but we did get one nice one in here. Let's see, 935. We had the same setup, guys. What I want you to take away from this is that we're using the same indicator set and the same setup across these markets, okay? You have bullish divergence right here, and up close right in here is where you would have been looking to get long, okay? Over here we had bearish divergence. Right down here we had bearish divergence, and we had a down close. Now when it tested the MA1, I had brought my stop up. I had reduced my risk quite a bit. Once it closed below it, I took my risk off, and then it just took off, and then I trailed my stop down. Okay, so that's where I got 17 ticks this morning on the Russell. On the YM, I'm sorry. Over here was a long opportunity, right here, you see it? Right there. Price came down, tested the BBC, gave an up close, I missed it. Over here for a short opportunity, same thing. The same thing here, price tested the BBC, gave a down close. It went down a little bit, but right in here I probably would have gotten out, break even right in here probably, had I taken that trade. Now, sliding down here, over here you see the MA1 was on the wrong side and it's going right into a weekly trading zone. Let's see, if we move all the way over here, we had bullish divergence. It's right inside a zone here too, so I wouldn't have taken this, okay? Over here, it's coming out of the zone. This was during the break. It didn't actually pull up far enough to test the BBC, though. Right in here, I don't think I would have taken this trade because the cycle was going up too strong and it was looking weak right here. All right, and that was the YM this morning. Let's see, I think the ES, the Russell, the YM, I did mark up some other markets, but I didn't trade on them. We did gold, right? Or maybe we didn't do gold. Okay, let me do gold. This is not gold. Sorry. That was crude oil. But I'll show you crude in a minute. I think we had skipped gold, so I'll go over gold. Alright. Gold this morning was difficult for me. The trades that I took in the beginning, the trades that I took were the losing trades, and the trades that I didn't take, of course, were the winning trades. That'll happen. My very first trade right here, we had bearish divergence, okay? There was a short right here. I believe that I got stopped out to the tick on that trade right there. Stopped out to the tick, exactly, right there, and then it dropped. The next opportunity, you see how the MA1 is going back and forth across the BBC here? Not really giving us anything to go on. Over here, it tested it. The MA1 was steady up above it. It tested it and gave us some bullish divergence. I got long in here and I took a little profit right in there. Okay, over here it almost got up here to test it. It didn't quite reach it, but we had bearish divergence at the time. There was no opportunity to get into that one. Same thing right here. Right over here we had some bearish divergence. I shorted right here. It gave me some profit and it went back and forth and back and forth and back and forth. I think it gave me probably 6 ticks profit at the most during all this, and then finally it stopped me out over here. Okay. Over here there was some bullish divergence. It tested the BBC with an up close. I didn't take that trade. This right here was another one of those incidents that I pointed out where the green just goes back in the same direction as the brown. Okay, you can jump into that for a few quick ticks in there. I missed that one. I was going to take it, but I missed it. Another long trade right here with a bullish divergence, tested the BBC with an up close. There was a short right here with the bearish divergence. I tested the BBC and a down close. I did take this one and I lost. I missed these in here, the same thing, long, bullish divergence, tested the BBC, up closes. Short over here that I lost. A short over here that I won. A long in here that I won. And another long in here that I won a little bit on. So I ended up down a little bit in the gold, but easily could have been made up right here in this one trade right here, had I been trading right then. You see there's bearish divergence right here and a pull up and tested the BBC with a down close, and that would have made it up right there. Alright, now that was gold. Let's jump over to crude. I didn't trade crude, but I highlighted areas on crude this morning that were opportunities where you could have traded using the same logic, the same everything. Alright, 4-tick range, same time frame, same everything. See the bullish divergence here? Tested the BBC with the up close. Over here, bearish divergence, tested the BBC with a down close. Over here, bullish divergence, tested the BBC with an up close. Over here, bearish divergence, tested the BBC with a down close. Let's see. Moving over here, bullish divergence, tested the BBC with an up close. This one you might have stopped out on depending what your risk was. Okay, or you might have gotten a break even. If you got in, let's say you got in right here. Yeah, you might have gotten a break even. You might have gotten stopped out on it. This one over here, bullish divergence with an up close right in here. Okay. Over here, bearish divergence with a down close. In here, bullish divergence with an up close. This is where I had stopped marking them up. Okay. Because I had done it at about 11 o'clock. There's a couple more bullish divergences with up closes. Here's bearish divergences with down closes right in here. Okay. And here's another bullish divergence with an up close. And right now, we currently have a bearish divergence with a down close happening. Okay. That is gold. I mean, that's not gold. That's crude oil. But you see I'm using the same exact indicator set, doing the same exact thing across all the markets. Okay, trying to keep it as simple as possible. The indicators that are on here, there's a CF BBC, the CF MA1, and the CF Slingshot. Those are the indicators that are on here. Okay. Let's see. Let me bring the NQ out here. I highlighted areas on the NQ this morning. I didn't actually trade the NQ, but I did highlight the areas. There weren't that many on the NQ compared to normal days, but you can see right in here. Right in here we had bullish divergence with an up close. Over here we had bearish divergence. Down here you see bearish divergence with a down close. That one didn't really go far. But over here the same thing, bearish divergence down on the bottom with a down close after testing the BBC. Over here bullish divergence. Test the BBC and an up close. Did it twice right in here. Down close right here with the bearish divergence. Down close over here with the bearish divergence. And that's where I had stopped marking up the NQ this morning. Maybe I didn't stop marking it up there. It looks like I got one more mark in right here. And over here you see we have bearish divergence with a down close. This was right at the break. Alright. Now there's bullish divergence going on. So right there was an up close, and right there was an up close with the divergence. Okay, you can see it tested the BBC and gave an up close, so you get long right in there. Let's see, I'll show you what I highlighted on soybeans this morning. You know, soybeans opens up at 10:30, and there weren't a ton of opportunities in soybeans, but there were 3 of them right here. Bullish divergence with an up close, bullish divergence with an up close, and actually I missed this one right over here, bearish divergence with the down close, and again in here bearish divergence with a down close. That's where I had stopped marking it. If I had continued to mark it or look at it, right there we had bullish divergence, tested the BBC with an up close, and that's where it ends on the morning. Okay, so I just showed you across about 7 markets, I think. I didn't show you the 6E. I didn't even look at the 6E this morning. These arrows are not from today on the 6E. But we can look at the 6E. We'll just do a quick analysis of the 6E. Alright, same stuff, same time frames, all that. Let's see. You see the arrows are all in the wrong direction. I didn't put these arrows on today. Over here was bullish divergence. Test of the BBC in and up close. Over here was bearish divergence. Get rid of that. Here's bearish divergence with a test of the BBC and a down close. And again, if you slide this over, bearish divergence, test of the BBC with a down close. It got you into that big move down. Moving over here, it got pretty messy in here, and there wasn't really anything you could go on. Yeah. And that was pretty much it on the 6E. Alright. Alright, I think that's it. So I covered crude, gold, the Russell, the YM, the ES, the 6E, soybeans, and I think that's it. Using the same exact stuff, doing the same thing over and over and over again. If you have any questions about this, you can contact me at support@cfrn.net. That's support@cfrn.net. And if you have any questions, contact me at support@cfrn.net, and I'll get back to you as soon as possible. If you have not taken the free trial, go to www.cfrn.net/apply, APPLY, and you can take the free trial there. If, what time is it, 12:27? Okay. If you have taken the free trial, and you have any questions about anything, either give me a call or just email me, all right? And I will get back to you as soon as I can. Okay? Let's see. That said, I think we're going to wrap it up, but I know that Dwayne's occupied right now, so we might just have to go right out to Vegas without the big intro and contact David. All right? All right, I think I accidentally shifted this all around too. I didn't mean to do that. Oops. Hey, David, are you out there? I don't have any fancy intro for you.
Good morning, Michael.
Good morning, David.
Where's Dwayne today?
He's here. He's currently occupied at the moment, and he will be back with us shortly.
Okay, great. Well, good morning, everyone. For those of you who don't know me, I'm David Williams. I'm a lot of fun most days, and I hope to be a lot of fun today. We had a nice weekend out here. I hope you had a nice weekend as well, Michael.
Weather-wise, it was nice. The weather was very nice. It was a very busy weekend for me.
Okay, sure
and it was Mother's Day weekend.
That's very true, and for any of the women in the audience, happy Mother's Day from all of us at CFRN. It's how can anybody say something bad about their own mother unless she happens to be a psychopath? Other than that, I have very nice feelings and memories, and most people do, and it's a great thing to celebrate.
It is indeed.
You can't take anything away from them. Well, let's see. You want to get right into the markets here? We
Sure.
can do that.
Let's get right into them.
Okay.
Let me bring up my ES chart.
Okay.
That is the one that we usually start with.
Let's definitely start with the S&P for today.
Take all the things off.
A lot of things have happened. A lot of bad news from Europe. These are the countries that have just spent themselves into oblivion. And our future is right there if we don't stop that or somehow turn around what this country is doing to itself through our policies, through this government, etc. Governments don't make money. They take it from people who earn money. So every time they waste money, that's money they're going to have to take from us. They're going to have us pay it. So when the waste gets up to the levels that it's at now, and when Obama is upped for president, which I believe he will be, we'll probably inch in on $20 trillion before his period is up. I don't know if that worries you or not, the average person, but it does worry me. Last year on this radio program, I mentioned that California was sunk. I said that they are hopelessly broke. Now, some of you will remember this discussion. And, upon reviewing what they've done and how much money they've spent, overspent, etc., there's no way. There is no way other than a complete bailout of California that they can fix their problem. They're too upside down. They're nearly $16 billion upside down. This is the state of California. That means they've spent $16 billion more than they could have ever hoped to have taken in. That's what that means. It means they did spend $16 billion more than they could have ever hoped to have taken in. And now, today, on the news, California is saying that they are hopelessly broke, that they're completely out of cash. And they are on the verge of some kind of possible catastrophe unless they get some kind of bailout of one kind or another. So there it is again in front of us. When you spend more than you take in, even if it's for good reasons, even if it's because you think you're helping people, if you can't afford to do it, you can't keep doing it, because the people you think you're helping there, you're doing that at the expense of potentially everybody. You're going to end up hurting everybody if you don't manage your finances wisely. And California has not managed their finances wisely. There have been some good people in California that have attempted to do so, but the force at work in California has been to, it's a very liberal state. I'm not against Democrats. I'm against the far left that wants to spend every last dollar on the nanny state and give everybody from cradle to grave support, socialism basically. I'm not for that. That's not how America got to where we are, certainly. And that's a fact. But even if you want to do something really good for people, if you can't afford it, you can't do it. And they don't get that. And so that's how California got to this position, which like I said last year, hopelessly broke, completely smashed, out of control broke. And that's where they are. And now it's on the news. Now, I mean, I just saw it today and I thought, well, there it is. And they're basically saying, we're broke. We're out of cash. And the only way they got there is because of mismanagement of 45 million people's tax dollars. That's how they got there. What is it with governments that they just can't manage other people's money well, that everything turns into a spend free-for-all, an unholy just free-for-all of spending? That's how they got to where they are. And they are sunk. California is sunk. There's no way out of this. There's no way out of this. The only way that I can think of, and this is what I said last year, the only thing I can think of that's going to fix California is a massive bailout from the rest of the country. And of course, the rest of the country, in a broader sense, is upside down as well, because we now have a deficit larger than the entire gross national product. So you can see that this whole thing, these are all cracks in a wall that somebody has to stop. Even if it's the same administration next year, someone has to stop this spending, because it's going to collapse the entire economy, and it's just going to crash and burn, and that is not going to be fun. Go take a look at the people. You've got literally 40% unemployment or something in Spain right now amongst people from 15 or 18 years old to 30, 25% overall. It's a mess, and that's how they got there. They got there from just relying on more taxing, more taxing, more taxing, and more entitlements, more spending, more giveaways, more this, more that, less productivity. This is what happens. I don't know why it's so not obvious to the far left that this is what happens when you give unearned benefits to people. This is what happens. He who makes it should keep it, except for a small tax to the government. But when the government then turns around and gives that money away in the form of unearned benefits to people who don't have it coming, don't need it, but somehow end up getting it, and through waste, through duplication of programs, through fraud, through all the just complete bad management that government is so known for, then everything comes tumbling down, just like it did in Europe. And unfortunately, that's where we would be headed unless something dramatic happens in our government pretty soon. So, you know, like I've said before, you can tax the rich all you want, but it isn't going to fix the problem. All the rich's wealth in this country would run our government for about 20 days. That's it. So it's not like, you know, the rich are going to solve this problem. The problem is waste, mismanagement, fraud, and abuse. That's the problem. The problem is we're just throwing money away, and the money they're throwing away is the money you and I work for, that we're being taxed on. There's something really weird about sending your money to a centralized group of people who never met you, they don't know you, they don't care about you, and then somehow they're going to supposedly manage your money very well for you in the form of these programs. And, you know, we all know the system, the elected system of officials that we think are going to do a good job for us, but somehow just hasn't been working out that well. This at this point is way beyond just the fact that we were already in a recession when this president got